Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 3rd, 2024, and I'm here to bring you some trading levels for a number of popular symbols for the upcoming week. Before I get into that, the usual disclaimer, Precision Trading Labs, we are neither money managers nor financial advisors. We do not give investment advice. Everything we do is for informational and educational purposes only, and we assist our subscribers in becoming competent, confident traders. So let's take a look at a number of these symbols, and we'll kind of get into some potential trading levels. First one we'll take a look at is Amazon. And here we have a 2-hour chart of this, and more or less it more or less captures the flavor of a daily chart, but we'll use the 2-hour just to kind of gives us a little greater detail in terms of isolating some trading levels here. So right here, in fact, we have a drop base rally formation, and price dips into here, consolidates, and then pops here. Um, Okay, one thing that I do have a little concern about here is this huge wick here. Normally, what we want to do and see in a base is more or less consolidation here. And so while it opens and closes relatively close together, this reflects a major volatility in this 2-hour period that occurred, I believe, on Wednesday of the prior week here, where we had this major spike up in the broad markets, and which was then given back almost right at the end of the day here. And so as a result, you have this huge, I guess refer to this as a dragonfly, and so this huge wick here, it gives us less confidence about this demand zone here. This is what we refer to as kind of a sloppy demand zone because of this wick. But what happens is we have a drop base rally formation, and this reflects essentially, if this wick wasn't here, it would reflect an exhaustion of willing sellers. So right here, willing buyers and sellers were generally in agreement within this relatively narrow range. And then once price leaves here suddenly, there's an exhaustion of sellers. If you want, if you take a look at right below this video, you'll find a link that goes through the whole supply and demand concept, and it's a relatively brief video that I did that kind of does a deeper dive into this. Okay, so at any rate, though, here is an area where we could expect a bounce here if we have a pullback of about 4% here. That's where this demand zone here is. But again, I'm really not very confident about this, and that's really all a result of this huge wick here. Okay, up on top here, this is the 52-week high, and I believe the all-time high on Amazon. Actually, it's not the all-time high, I believe, on Amazon. That actually occurred earlier, or a few months into the pandemic was the all-time high. But this is the 52-week high for Amazon here. So right here we have a rally-based drop formation here. This reflects an exhaustion of sellers right at this peak here, and then right here we began this major drop, and so about 1% up. This is an area where we could express a bearish trade. And so if you take a quick look here, you'll see here's that concept of a bearish trade here. And so, okay, here's the supply zone here. It's an area of downward price pressure, and that's created by an exhaustion of buyers in that range here. And so the way we could express a bearish trade, of course, would be to either, short the stock, or of course we could buy a put, and then there's a couple of very basic option strategies that one could use. So but these are the two flavors of a supply zone here, and this is what we're looking up here is the rally based drop formation. Okay, and so if we take a look here, there's the rally, there's a base which consolidates right next to the peak, and then right there it begins that essentially at this pivot. This reflects a sudden exhaustion of buyers here. And so where supply and demand were in balance here, it goes out of balance with this exhaustion with this immediate exhaustion of buyers here. And so as a result, once the demand leaves, that leaves only supply, and that's why we refer to this as a supply zone. So there's a supply zone, a fresh supply zone about 1% up, and then again there's this demand zone which I have a lot less confidence in because of this huge wick here and on all of this price action in here. So there's really nothing I'm in love with in terms of a buy until something comes until we get a pullback here and a more solid demand zone gets formed there. So that's the story with Amazon. Apple had just announced earnings last night. And so, in fact, right here, here's that gap that got created by that essentially a massive move after they announced earnings and they also announced a major stock buyback. In fact, that's really what drove this gap here, because the revenue. Um, um, the revenue data associated with the iPhone, in fact, was disappointing. But this stock buyback is what more or less kind of drove this that drove that spike there. So if we take a look at the daily chart here, here is a drop base rally formation. Okay, and so that's this is another what this is a demand zone here, and so here is the drop base rally formation, and so what we're waiting for is a pullback into this demand zone, and then we could express in this case a bullish trade. Okay, and so the bullish trade, of course, would be to buy a stock, buy a call, and then of course one could also do a vertical debit spread, or one of course could also either sell puts or do a bull put vertical spread, which essentially would involve selling a higher strike put and then buying a lower strike put in order to constrain and to define risk. So those are all various flavors of expressing a bullish trade out of that demand zone here. Okay, so that's a fair distance down here. That's about, let's see, in terms of distance, that's about 6% down from the close of where we are, or where we closed. And in terms of the supply zone above, that's about 2.5% above. So right here we have a base drop formation here, and again, and there's a gap here. So this is where we'd be looking to express a bearish trade out of this supply zone here. Okay, if we take a look at Microsoft. Here, this looks actually fairly similar to that supply zone that we just saw on Apple. So here's a base drop formation. And so the distance here again is about 2% higher. And then below here, this is an area of tested demand. We had a drop base rally formation. Okay, price has already been back here once, and then it was back here a second time a couple of days later. So this represents tested demand or support. It's not fresh demand. Fresh demand is a lot better than tested demand. There's an expression: the first test is best. If price returns here, this would be the third time price has been back here. And so it's quite possible that on that third visit, there may not be any, there will be, it's a lower probability trade because there may not be any demand left in here. So consequently, for Microsoft on the buy side, the first area of tested demand is down here. This overlapping green candles here. If we turn this into a 2-hour chart here, we would see here that in fact there is a demand zone sitting right below here. In fact, so we shoot back here, and then right here we can see that there's a rally. You can see it bases there. Then there's that little gap, and then there's that pop there. So right here, and that represents an exhaustion of sellers here. Okay, right here, buyers and sellers, willing buyers and sellers were in agreement within this roughly about 1% range from 371 to 375. And then all of a sudden right here, there's an exhaustion of sellers. Okay, so this is really the first clean area of demand. And so that's obviously a ways down here. So in terms of an immediate trade with Microsoft, we would probably actually be looking for a rally up to this supply zone in order to then express a bearish trade by basically buying a put up here. That's actually a good zone right there. Okay, so that's what we would be looking for on Microsoft. If we take a look at Nvidia here, okay, right there, there is a supply zone right here. Here is a rally base drop formation. Okay, we're looking at it in the 2-hour chart. If we go back to the daily, it probably looks a little cleaner since I do have that notation there. Daily, and then you can see very clearly rally base drop there. So that's where we are here in terms of the distance here. I seem to have lost the line here, but in terms of the distance, that's obviously not a very not a very great distance here, and that would be about well, it's about 5% up. So that's actually a pretty substantial move up here. But if it gets there, that would be in fact where we would be looking to express a bearish trade. And in fact, that's the 52-week high as well as the all-time high up here for Nvidia. So that's the story with that. Basically down, it's a long way down until we actually find any kind of fresh demand. So what we would be looking for is we would be looking for a pullback and then some consolidation here in order to actually get a kind of a clean, fresh demand zone. But there really isn't anything here at the moment. So for the moment, that really we'd be looking for a rally up to this supply zone in order to express a bearish trade with Nvidia. We take a look at the Facebook Meta. Right here, there really isn't any great any supply or demand zone that are close by. But the thing that I do notice here, though, is here's where we closed, and if we get a push down, right down here, there is a gap fill. Okay, there's a gap that's waiting to be filled here, and so right here, there is kind of a sloppy drop base rally here, and so that's sitting. If I just fill in the label here, let's just see, put that on here. So that's at around the 427 region. So if we get a push down here, and again, that would, we don't really see any trading levels in here. But if in fact, if there is a market decline, and we get down to about 427, that might be an area where one could, because right here, there is really there really isn't any demand even below here. So one could attempt a bearish trade at 427, okay? But then at the 414 level, then there is a clear gap fill that runs from 414 down to about 395. So I wouldn't really be looking to, and of course up here, there's this other gap, of course, that's waiting to be filled here because this was the Meta's disappointing earnings announcement recently, and so it got hammered here. So right here, we're actually starting to fill this gap here. Okay, so we're really not looking at least for the moment. We don't really see anything that we're in love with in terms of trading with Meta here. Okay, here's Netflix. Right here, we have the drop base drop formation. Okay, so again, this would be an area that we would be looking to express a bearish trade if, in fact, we get this gap fill here. So that's the story with Netflix here. Underneath, we do have some support, but it's certainly not clean or fresh. It's not fresh demand here. So again, we would be looking for, some price action here that would create an area of consolidation and actually create a clean demand zone. And then on a pullback there, then we would be looking to buy. But at this moment, I don't really see anything, at least from this methodology, that we would be looking to buy here. And then we'll wrap this up here by taking a look at Tesla. In fact, this is something that we had been looking at last week. And at the open this week, a bunch of our subscribers actually got into this. There was a rally base drop formation. Price spiked up into this, and in fact, a number of our traders, subscribers, actually had basically bought puts at around the 198.30 mark and rode that down to about 181. So that was actually a real nice trade for a bunch of our subscribers, and a lot of them just kind of closed it out at the end of the week here. So at any rate, that's the story with these symbols. Those are our trading levels for the upcoming week, and I will see you next time. Thank you.